Hello there, this is Sanmi Adeagbo. I want to quickly share with you some of some of the things I have. Some currency pairs in my on my watch list. I've been watching these currency pairs for some times now, and been analyzing with the Elliott wave principle, Elliott wave theory. Then we can spot good trading opportunities from this analysis. But let me put this disclaimer before I start, that nothing is sure in the market. Any decision that you take out of whatever the content of this video is solely at your own risk. The profit, the loss is totally to you. Okay, will not take responsibility of any of that. So let's get started. Okay. Let me take you to my I have some currency pairs on my watch list. These are the currency pairs I have on my watch list, and I'll quickly take you to my platform so that you can see what I'm talking about. Now we'll be starting with the yen pairs. Okay, for some time now the yen pairs have really gone extreme, okay, kind of overbought, okay, and now we're expecting price to start coming down. Let's see the extent to which the move downward is going to be. Now this is GBP yen. We'll actually be looking at the GBP yen, the USD yen, and the Euro yen for the yen pair before we go to the other ones I have on my list. Now since August 2015, price has been moving down in a very nice, well-formed 5-wave structure, and then the 5th wave even ended. The fifth of the fifth wave, okay, ended with a diagonal mount. Okay, it looks like a diagonal mount, and we saw this very beautiful breakout. And normally at the end of this kind of move, according to the Elliott wave theory, we expect price to if you have this, according to the Elliott wave theory, if you have 5-wave move like this, okay, if you have a kind of 5-wave move like this, you will be expecting a kind of a 3-wave correction in the opposite direction. Okay, yes, we're expecting 3-wave in the opposite direction in this manner. This is A, B, and C, and more often than not, this correction, this expected correction is usually 61.8% retracement of the trending move. Of this move. Okay, let me get this right. Okay, it's usually 61.8% of this move. I kind of from ear to ear, the 61.8% of this. That's where we'll be expecting our price to correct to, and that is what with this move now. That means there's still a long way for this correction. So if there's going to be a typical correction, then there's still a long way to go, because price may still rally up to 168.34 or between around this level. This was the 4th wave, the former 4th wave of this degree, and we may see price rallying to this zone. So it's something that we may see in the coming periods, in coming weeks, or maybe few months time. We see price going here. But with this breakout here, are we going to see a correction? Because normally this is supposed to be an A, a B, and a C, just like we have here. Okay, an A, B, and a C this way. Now what we just need to know now is how we need to ask ourselves is if this A wave is an impulse wave. It needs to be an impulse wave. So if there's an impulse wave here, then it is a normal that we will be expecting a 3-wave correction before the next move goes up, okay, to this zone. So let's try to see what we have here. Okay, let me remove this. Okay, so we'll see what kind of move we have here. So let me go to a lower time frame. Let me go to the 1 hour time frame so that we can see it clearly. Minimize this. Okay, fine. So this is the breakout we're looking at. Okay, this breakout, and look at this breakout. Is the breakout was actually a very well-formed 5-wave move. 1, 2, 3, 4, 5, which is actually what was actually what we are expecting. And if you also look at this level here where we are seeing this correction, it's a very nice Fibonacci cluster zone. All right, so when our pattern completes at this kind of level, one will be expecting a kind of reversal. Okay, so based on this, we're expecting price to move down. Okay, the next barrier is this trend line, but price will be expected to after getting here, pull back a bit and then break below here. Okay, if this move is actually going to happen. But once price breaks below this trend line, then we'll be expecting a move that could get to probably like 50% of this wave. We're talking of something around here, around the 134.69. Okay, so where is a very good entry? I will be considering an entry if price, I mean a kind of aggressive entry here, if price can break below this fourth wave. Okay, if price can break below this fourth wave, now I'll be considering a selling GBP yen, and then while I will be watching how price react here. Okay, I'll be very okay with my decision if I see a very nice impulse wave down to this zone. But if there's anything corrective, anything sideways, then one may have to jump out. Just at the end of this kind of move, you're expecting an impulse reaction of a lower degree, okay, with a pullback, and then the next one should be strong and break below here. So a sell below 142.54 will be very nice with stop loss here. Okay, and a move completing around there at a very good level. Okay, the same thing is happening, or let me say something similar in US dollar Japanese yen. We're also having price reacting, I mean forming this same kind of pattern at a very good zone as well. We can take a look at the may probably be the daily chart, or that is not okay. We will look at the 4-hour chart. Okay, so this is the daily chart. After price broke out of this level here, okay, we had a move that completed around there, and we saw this correction, this 1 2 3 4, this 5 wave move, just like we had in GBP yen, and then we saw this nice breakout. You can also see this is also a very nice diagonal mount, even better than the one we had in GBP yen. There was a breakout, a pullback, and then we saw this nice rally, especially after the US election, and then the rally looked as if it's not going to stop. Okay, but at this point now, with price getting to the former fourth wave, we should be expecting a pullback soon and probably another move upside. So we can also take advantage of this. Let's go to the lower time frame and see what we have there. So in the lower time frame, the breakout also is a very nice, beautifully formed impulse wave. Okay, a very nice 5 non-overlapping move. Okay, from here we saw wave 1, and then we saw wave 2 before okay, we saw wave 2 here, and then we saw this third wave coming here. Okay, let me see if I can take it to maybe 2-hour chart so that we can see it better. Okay, fine. So we're having wave 1, wave 2, wave 3, wave 4, wave 5 formed here, which is very good. So for this for the US dollar Japanese yen, typically one will be expecting price to break below here before selling, okay, or wait for price to break below and then pull back before selling, stop loss maintained here. But like I always sometimes I go somehow aggressive, and it works very well to be aggressive sometimes, in as much you are consistent with it and you aim about 1:3 each time you are trading. So this is the end of wave 4 here, and we've seen a kind of 5-wave move formed here with this double top. So I'm considering selling once price breaks below this level. Let me indicate it. Once price breaks below here, okay, once price breaks below here, okay, maybe something around the 113.5 or so, okay, a very nice move below here, then I'm going to take a sell position with my stop loss here. Okay, so this is also a very well completed impulse at a very nice level. And the next one is the Euro Japanese yen, which is also forming the same pattern as others. let's look from the daily chart as well. We will see it clearly, and then we can see that the euro yen, sorry about that, the euro yen is okay, fine. We can see a kind of 5-wave move that is happening: wave 1, wave 2, wave 3, and then this is the 4th wave. Okay, this is the 4th. At the end of this 4th wave, one will be expecting price to take a new move downward, okay, probably to break below here. So we can also take advantage of a profitable move that could happen, okay, down here. So how do we take advantage of that? Let's go to, okay, before we even take advantage, let's look at the kind of pattern we have in the 4th wave, that will know how to take advantage of the formation that we are seeing, the kind of structure that we are seeing. You could see here that let me go to the 4-hour chart. Yeah, we could see here that we're having this is wave A, B, C, D, E, a kind of triangle, and then a 5-wave move here. You see, it's a very nice, well-formed structure, which is also happening at Fibonacci confluence zone. Okay, very beautiful formation. So what I will be doing in this case is to wait for price to break below this trend line beautifully. Okay, once price breaks below this trend line beautifully, then I will consider a sell somewhere around here, stop loss here, and then aim to even go below. Euro yen may go below GBP yen or US dollar Japanese, because this is a 4th wave formation here. But nevertheless, whatever that happens, okay, at this break, we can always come back and see price reaction at the end of every formation, because at the end of every formation there is an expectation. Okay, once price breaks below here, we'll first of all like to see an impulse wave. So if you happen to see something corrective in nature or something sideways in nature, we may just have to jump out, because price is not giving us our expectation. That's one of the way we can use one of the ways we can use Elliott wave as even an exit strategy. You understand now? That's the exit strategy we use in the Elliott wave theory. At the end of a formation, you have an expectation. Once the expectation is not coming, or especially when you are seeing the exact opposite of what you should see, then we just have to think of exiting the position entirely. So I'll be looking for a break out of this trend line here, okay, connecting 2 and 4 of the C wave of the larger degree 4th wave. Okay, so that is it about the yen pairs. So we may see the yen pairs falling for some time, we may see the yen pairs falling. And now I was looking at the GBP US dollar, okay, for some times now, and I was looking at this 4th wave here. Okay, that was actually a 4th wave after a 5-wave move. A 5-wave move. This is 4th wave. This is the 1 of 5, 2 of 5, 3 of 5, and the 4 of 5 here. Then I was actually thinking that if price actually has ended the 4th of 5th wave here, then this move and then this correction, then I'll be waiting for a break below this level. Okay, let me show you on the lower time frame, probably 45 minutes. I was thinking of pulling a sell holder, especially when price was here, A, B, C. I was thinking of pulling a sell order once price breaks below this level, okay, with my stop loss here, but price didn't break out properly. Okay, it just went upside, and I had to label this as an A, B, C. So this may not really be a second wave anymore, because the second wave does not even get above, go above the starting point of the first one. So this has violated an impulse wave expectation or a motive wave expectation. So this may not really be a motive wave anymore. So we just have to drop this and see what next price is gonna do. Okay, but I still have that belief that GBP pairs are going down. GBP US dollar is looking so bearish. The bearish move is expected to continue for GBP pairs. Okay, but anything can actually happen in the market. We may still a continued rally, especially looking at this, that this formation has already been violated. Okay, so let me take you to the next one, the GBP card, which is an almost exact replica of what we have in the GBP US dollar. Okay, this one is really preferable, especially when you consider the fact that the card pairs are really getting strengthened. So DVP card is expected to go down, and what a nice formation we have here, a 5-wave move and ABC correction. So at the break of here, expecting if price can break below here, I'll be looking forward to a selling order. Look at this triangle formation, an ABC move. Okay, it looks complex in nature actually, but it's an ABC move. Okay, like a kind of okay, it's an ABC move. It looks complex. Let's not go to the internal formation and all that. So this is a sideways move, a 5-wave move downside, then ABC move, and then we'll be expecting price to break below here. Once there's a break below here, then we can I'll be looking forward to selling, then with stop loss just above here. And then what's going to be my target? Well, the minimum my target is a 1:2. Okay, so that is a GBP card. And let's look at gold. Okay, my bias on gold is bullish. After I was able to ride this move, I was actually using the Elliott 2 theory, I was able to forecast a fall from here. Okay, before the news disrupted, and immediately after the US election, we saw price moving down again in a very nice 5-wave move with 1, 2, 3. So I was involved in majority of this move after the election, and it was a very wonderful one. And then the last one was that I was expecting the wave 5 to have ended here, so I was expecting price to break above here. So price actually got to my entry and then was moving sideways out to exit. So that's what I was saying. I said the other time that we have an expectation that after this move here, I labeled it as the 5th wave. Normally I was expecting a 5-wave move and a motive wave. Okay, once I don't see, that's going to be the minimum requirement. Once I don't see that, I have to start doubting the integrity or the accuracy of this of the pattern entirely. So look at what I saw here, a kind of sideways move. It looks sideways. I couldn't point out any motive wave here at all, and then once price broke below this trend line, I had to exit. Okay, I had to exit. You don't have to wait for your stop loss to be hit. The stop loss was around here. So but I'm still expecting price to go up. Okay, the final target I was expecting price to even get was 1155, and then price was almost got there. This is 1159, and then I'll be expecting to I will be looking forward to a buying position if price could break above this trend line here. Okay, if price could break above here, so this is going to be wave 1, wave 2, wave 3 here, wave 3 here, wave 4 here, and then wave 1 of 5, wave 2 of 5, wave 3 of 5, wave 4 of 5, and then wave 5 of 5. And then if you also measure the Fibonacci after, measure the Fibonacci ratios of that, you discover that 1155 is a very nice reversal zone. Okay, 1155 and then 1180, which was our last target before we enter a buying order around the 1191 or 1192. Okay, so we'll be expecting price to break above here. Once I see a break above here, then I'll be looking forward to buying, okay, around the 4th wave here with stop loss around here. And the target is going to be around 61.8% of this entire move. Okay, so that is my intention for the gold. For gold. And then the GBP chip, I actually dropped that. It has violated my pattern. Then the US dollar card, we actually started selling the US dollar card around here early, even before the OPEC news and all that, OPEC meeting and all that. We actually held on. We held on to the bearish position, and then price has actually broken below here now, and so we expect this move to continue. But why did we consider a sell? Let me quickly show you for educational purpose. Okay, the yen has been in a very nice a very long-term correction. Sorry about this. Okay, very look at this sideways move. So it is so important that after this move, and we're having this sideways, you'll be expecting price to actually break below here. And look at this midpoint. Price has actually gone beyond this midpoint, and then this pattern itself is a double zigzag. If you go to a lower time frame, that looks clustered together. So this is a W, this is X, and this is Y. Look at this very nice move, very nice formation. Even this one is an A, B, and then the C is an ending diagonal. The X is a zigzag, and then the Y is a zigzag also. So this is a very nice double zigzag pattern, and then we noted a selling opportunity here. Now that price has broken below, we will be expecting a very nice move, okay, down to maybe even 1.3. 1.3 is actually our ultimate target. Okay, so that is it about the US dollar, Canadian dollar. And do I have any other one there? Okay, GBPs, you don't want to show that's violated. US dollar index. Okay, US dollar index, we have a bearish bias for US dollar index after a very long term bullish move. Okay, this bullish move started in a very from here around 2000 and very long term. Let me go to the weekly chart to see that. Okay, this is around 2011. Look at a very nice 5-wave structure, and then we're expecting we have a kind of projection to this level here to 1273. That the 50 might get there before we see a major correction. All right, and then we could see our price is maintaining the middle line here, the middle line of this channel, bouncing off it here and then going upside. But what we'll be looking at now, considering the fact that the NFP is even coming tomorrow, and the decision that will be made by the Federal Reserve next month concerning the interest rate, we will be expecting actually a bearish move for the US dollar index. But this is how we intend going about that. Let me take you to the 1 hour chart and then see what has happened from let me go to the 2 hour instead. Okay, so from here we could see a 5-wave move. Okay, this is the end of the fourth. We saw the end of the fourth wave. The fourth wave. Okay, and we saw price from here with 1, with 2. Okay, up this way, wave 4, and then wave 5. Even wave 5 itself is a 5-wave structure here, and then we are seeing this corrective nature here. A kind of 1, 2. We could see A here coming this way, probably a double zigzag, another one, another double zigzag, or we may have a triple zigzag or something. We know that the move may not really be as strong as what we have been having, because the US dollar economy is still very, the US economy is still very strong at the moment. So we'll just be expecting the US dollar index to retrace, okay, this way before a move comes up. So in the subsequent, we'll not be really taking any position for US dollar index directly, just using it to spot to gauge the currency pairs that are denominated in the US dollar, that have US dollar as a base currency or as a counter one, like the GBP, US dollar, Canadian dollar, the major currencies. So for US dollar index, we'll be expecting an ABC move, okay, a ABC move downside. So that is about the US dollar index. And then do we have any other one? I think that is all. Okay, so those are the these are what I have on my watch list actually, but these ones are the ones that are worth mentioning at the moment. I want to appreciate you. Please try to subscribe to this channel, as I promise you to always give you a regular update, okay, like twice a day. Okay, I promise you that. So you can always come around, check early in the morning, okay, the London Open, and then probably before the New York Open as well, or maybe during the New York Open, to see what the Elliott has to say about the currency pairs that are appearing in such a way that a pattern is about to complete. Okay, so I will not be boring you with analysis of all the currency pairs. I will only be talking about the ones I have on my watch list, those ones that have very clear structure. Okay, so I want to thank you very much for following this video, for watching this video, and I will be back some other times, okay, to also talk more about the market, the currency, not only the currency market, but we'll also be talking about the indices and the stock market. I mean, those ones that are very, 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 very clear. Okay, thank you very much for watching. Please try to subscribe to this channel, and you can also share this video among those people that you like so well. I mean, your friends, your colleagues, and those people that you think this video is going to be of importance to. All right, thank you very much. This is Sanmi Adeagbo. Okay, I'm saying bye.